So Bitcoin is almost at 100K. At the time of recording, it's sitting just above 99,000. That's incredible. You're talking of millions of percentage increase from when it first launched. But we don't want to lose sight of some of the latest big players that are making this possible. They're attracting interest from other major players. Here I'm talking of institutions. So today we want to look at MicroStrategy's Bitcoin strategy. It's funny, right, to say it like that. What is it all about? What are the pros? What are the cons? And where do we go from here? And what are other institutions going to do? Because I think MicroStrategy may have started something, but we're yet to see whether there are some risks that are associated with MicroStrategy's Bitcoin strategy. And a good segue to get into the next video that we're going to be recording is going to be about the risks associated with MicroStrategy's Bitcoin strategy. So if you want to know more about that, click like and subscribe and then smash that notification bell because that video will drop soon. And that will be focusing just on the risk side of what MicroStrategy's Bitcoin strategy is all about. But before I jump into today's update, guys, please note that I am not a financial advisor. If you do require financial advice, please approach someone who's trying to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes. Like I'm saying, educational, and what we are trying to do here today is to educate you on what MicroStrategy's Bitcoin strategy actually means to both MicroStrategy and their investors, as well as the wider institutional investment arena, and maybe the impact on your bags. I'm talking about you retail. So, MicroStrategy, who are they? Well, MicroStrategy Incorporated is an American development company that provides business intelligence, mobile software, and cloud-based services. Founded by Michael J. Saylor and Sanju Bansal, sorry if I'm butchering your name, it is headquartered in Virginia, United States. MicroStrategy has adopted what it refers to as the Bitcoin strategy, whereby the company is issuing some sort of bonds in order to raise money to buy Bitcoin for its treasuries. They're holding Bitcoin, and I think they're actually making more money from holding Bitcoin at the moment, book value of course, than the rest of their operations. So based on that narrow scope, you could turn around and say Michael Saylor and MicroStrategy have nailed it. But if they are not selling, is that book value sustainable? So MicroStrategy's Bitcoin strategy is high risk, high reward. While it has the potential to generate significant returns, it also exposes the company and its shareholders to substantial financial and market risks. But then if that's what the shareholders want, that's why they keep buying these senior notes that MicroStrategy are putting out there on the market, because they want exposure to Bitcoin, but they can't directly be involved in Bitcoin. So in other words, MicroStrategy is a proxy for Bitcoin in this case. But the strategy differs fundamentally from a Ponzi scheme in that it provides transparency and reliance on a real asset, and its success is contingent on Bitcoin's continued growth. A more balanced approach with safeguards against downside risks could improve its sustainability. As part of our critical analysis in this video of MicroStrategy's Bitcoin strategy, let us get started by considering the pros and cons for following such a strategy. Let's start with the pros. Bitcoin has historically demonstrated periods of explosive growth. MicroStrategy's early and aggressive investment in Bitcoin could yield substantial profits for the company and its shareholders if cryptocurrency prices keep appreciating over the long term. But we know, from our point of view, I think it's most likely going to pay in the short term, but if they're not selling, they're not going to benefit from that. So that's something to keep in mind, because long term, you don't know where this technology will go, or something better comes along, you never know. In adopting Bitcoin as a treasury asset, this positions MicroStrategy as an innovative, forward-thinking company. This has attracted significant media attention and bolstered its image among cryptocurrency advocates. To be fair, if it wasn't for Bitcoin, I'll probably not have come across MicroStrategy in the wider public arena. In my investment journey, I probably just went past it because I also invest into traditional stocks. So I probably just went past it. I didn't even look at it. Bitcoin is often described as a digital gold due to its limited supply of 21 million coins. This could help MicroStrategy protect its treasury from inflationary pressures in fiat currencies. We know the dollar is being devalued on purpose. Inflation is high and they keep printing more money. So you got the dollar suffering from inflation and they're also printing more of it. So you can see why MicroStrategy would have chosen such a strategy. Some investors who believe in Bitcoin's potential have been drawn to MicroStrategy as a proxy for Bitcoin investments, resulting in higher trading volumes and greater stock price volatility, potentially benefiting short-term speculators. This is what I was referring to earlier in the video. In the short term, I think there are huge gains to be made here, both for those who are speculating on Bitcoin and speculating in MicroStrategy. Because if you look at their price chart, their stock, it's crazy. It's resembling a hockey stick. Some people in this sphere, cryptocurrency, they call it banana zone because it's kind of shaped like a banana, but for me, it's more like a hockey stick. That's where we are with MicroStrategy. And you start wondering whether this could keep going on and on. At some point, something will give. The MicroStrategy's Bitcoin strategy also enhances diversification of treasury assets. Holding Bitcoin provides an alternative to traditional treasury assets like cash, bonds, and or equity. This could reduce reliance on traditional markets. Now, those were the pros. Let's go to the cons. Bitcoin's price is notoriously volatile, as evidenced in the chart. As you can see, a major downturn in Bitcoin's price will directly impact MicroStrategy's balance sheet and stock valuation. MicroStrategy is issuing bonds to fund Bitcoin purchases, so there are some debt risks involved in this. This adds significant leverage to the company's balance sheet, increasing its financial risk. If Bitcoin prices crash, the company might face difficulties in paying its debts. But then, from our understanding, they are selling these senior notes at zero interest, so they're not paying any interest at all. So maybe that is a masterstroke from MicroStrategy. Traditional shareholders who invested in MicroStrategy for its core business may now face increased risks due to the company's pivot to a Bitcoin-centric strategy. This shift may alienate investors who are not comfortable with cryptocurrency exposure. I think there are plenty of them, but by now I think they are all out of MicroStrategy. But if they're out, looking at these gains, did they leave too early? You tell us what you think. We also have the regulatory uncertainty where governments around the world are still developing their cryptocurrency regulations. Adverse regulations could negatively impact Bitcoin's price and liquidity, potentially harming MicroStrategy's Bitcoin strategy. But with the setup in the US at the moment, with the incoming president in Donald Trump, they're putting in place a structure to support cryptocurrencies because they can see the benefits, and we know Trump with his NFTs, and now they've got a DeFi platform that is built, I think it's built on Ethereum. I think they're all in now. From our point of view, what Trump is doing is not more for his sake, but it's for his supporters. He's trying to thank them, and also for his children, because his children, if they nail it, they're set for life. They can't do what Donald Trump has done, but if they can do this, they'll come out of this set up for life. And MicroStrategy's Bitcoin strategy also indicates a lack of focus on the core business. I think we've already, I think it's all obvious now. I think that is almost out of the window. MicroStrategy's core business of business intelligence software may have been overshadowed by its Bitcoin activities. This lack of focus could lead to stagnation or loss of competitive edge in its primary market. And the fact that they're buying Bitcoin over 80 grand per Bitcoin, when the bear market comes, they may struggle to raise more money to buy more Bitcoin because their average price or average cost will have increased significantly. Now, let's compare what MicroStrategy are doing to what some people are suggesting that it might be a Ponzi or pyramid scheme. The similarity are as follows. You got both strategies involve the promise of high returns based on speculative growth. They both heavily rely on attracting new capital via bonds or stock appreciation to sustain operations and investment growth. But we also need to cover the difference between a Ponzi scheme and what MicroStrategy is doing. MicroStrategy's Bitcoin strategy is fundamentally different because Bitcoin is a real asset with intrinsic market value, albeit speculative. A Ponzi scheme typically involves non-existent assets or fraudulent returns. There is transparency in what MicroStrategy's operations are, as it publicly discloses its Bitcoin holdings and strategy. So people who are investing into MicroStrategy stock, they are walking in with their eyes wide open because they can see what's going on. If there are certain things they don't understand, I'm sure they will have done due diligence to make sure they understand what's going on. Therefore, they proceed and invest in MicroStrategy. So that is MicroStrategy's Bitcoin strategy in brief. So what is the impact on the Bitcoin market and the wider cryptocurrency? Let's look at our price influence first. MicroStrategy's significant Bitcoin purchases have likely contributed to price increases due to increased demand. If the company sells large portions of its holdings, it could create downward pressure on the market. But there is also increased institutional adoption because every company now is trying to follow what MicroStrategy is doing. MicroStrategy's Bitcoin strategy may encourage other companies to adopt Bitcoin, increasing its legitimacy and market adoption. And we have also heard rumors that Michael Saylor, the founder of MicroStrategy, is going to be briefing the Microsoft board of directors on his Bitcoin strategy. Moving on to sustainability of MicroStrategy's Bitcoin strategy, here are some of the potential scenarios for success. Bitcoin achieves mass adoption and price appreciation, allowing MicroStrategy to generate substantial returns. If anything, if you go with Michael Saylor's Bitcoin price forecast, 13 million each Bitcoin, the guy is dreaming big. But then that could be a danger because you could become delusional because he can only say that to encourage more people to invest so that it gets to his price prediction. But then if he keeps talking about not selling his Bitcoin, if it reaches, say, 13 million this cycle, what is he going to do? Is he going to cash out? If he cashes out, the whole thing crashes. Other companies may follow suit, reinforcing the strategy as a sound treasury diversification approach. But what could go wrong? Well, extended bear markets in cryptocurrencies could erode MicroStrategy's asset value and shareholder confidence. Increased leverage from bond issuance could lead to liquidity crisis if Bitcoin underperforms. And finally, you got regulatory crackdowns on Bitcoin could drastically affect its market value and accessibility. Let's not lose sight of the fact that the current economic system is based on fiat currencies where governments print currencies at will. If that tool is removed, what are they going to do? Because most of these currencies, after all, are supported by huge armies and weapons. What could happen? That's something to keep at the back of your mind, just in case. So folks, that was my insight into MicroStrategy's Bitcoin strategy. What do you think? For myself, I think MicroStrategy's Bitcoin strategy is still high risk as well as high reward. While it has the potential to generate significant returns, it exposes the company and its shareholders to substantial financial and market risks. The strategy differs fundamentally from a Ponzi scheme in transparency and reliance on a real asset, but its success is contingent on Bitcoin's continued growth. A more balanced approach with safeguards against any downside risks could improve sustainability. What are your thoughts, guys? Let me know what you think about MicroStrategy's Bitcoin strategy. Until the next one, this is FD signing out for now. Bye.